Hire purchase, here there are different types of questions which can be tested. First one is basics like calculation of which one? Interest. Interest. In that you could have done in the regular class about calculation of interest. Okay. So before that, what is a hire purchase? What is a hire purchase? Hire becomes the owner of the asset on the payment of what? All the installments due. Okay. You just pay all the installments, you become the owner. Even if you don't pay 1 rupee, I have the right to what? Take over the asset. That is which one? Hire purchase. Okay. How interest will be calculated? Simple. It will be calculated on the principal amount outstanding. Simple. Whatever is the loan outstanding. Or you can say whatever is the cash price outstanding. Clear? So whatever is the principal amount outstanding at the beginning of each year, on that basis what will be calculated? Interest will be calculated. For example, I purchased an asset of 5 lakhs. I paid a down payment of 1 lakh. Suppose if the balance is like 4 lakhs, first year interest will be based on what? 4 lakhs. 4 lakhs into 10%, 12% like that. Suppose if you are paying installments in once in 6 months, whatever is outstanding for that period. Let us assume out of this 4 lakhs, first year you settled 2 lakhs means second year interest will be worked out on the balance outstanding. So this is the basic principle. Interest will be calculated on what? The principal amount outstanding. There are certain terms you use. Cash price. What do you mean by cash price? That is a normal purchase or which price? Selling price of the asset. That is the cost of the asset to the hire purchaser. That is the cost of the asset to whom? Hire purchaser. For example, in the ordinary course of business, when I buy an asset for 10 lakhs means that is the cost of the asset for me. Then what is hire purchase price? Simple. Cash price plus what? Interest. Cash price plus interest will give us what? Hire purchase price. Or you can say down payment plus what? Total value of all installments including interest. Okay. Either you had cash price plus interest, that will come in which one? Hire purchase price, or down payment plus what? All the installments including what? Interest. Please remember, cash price is recognized as which one? Cost of the asset. And what about interest? Is recognized as what? Expense. On which basis? Accrual basis. Clear? Cash price will be recorded as cost of the asset, and interest, whatever is payable or paid for each year, that will be taken as an expense on what basis? Accrual basis. Okay, do you understand? Hire purchase price includes what? Interest. While recording the asset, ensure that only cash price is recorded. That is excluding what? Interest. Interest should be recognized as an expense on what basis? Accrual basis. Accrual basis. Now let us come to the last 4-5 pages or last page of the problem. Go to question number 1. We'll also be doing some extra problems based on this. Go to question number 1. What is the cash price? 2 lakhs. Down payment 50,000. Remaining principal amount in what? 3 installments with an interest of 12% per annum. So they ask you to calculate what? Interest, all those things. I'll share this working. If you have not taken up, no issues. I'll share the today's working. Yeah, pay attention. What is the cash price of the asset? This can also be called as loan. Okay, 2 lakhs. Huh? In this, how much of down payment we are making? 50,000, we make it immediately. Whether the down payment will include interest? Down payment is made on day 1. So no interest will be there. This is also considered as one installment. 50,000. Then, what is the balance outstanding? 1,50,000. This has to be paid in how many installments it is given? 3 installment means first year, second year, third year, you have to pay what? How much each? 50,000 each you have to pay, of course with interest. Of course with interest. First year, what is going to be the interest? On 1,50,000 into 12% you have to pay. 18,000. Total will be 50,000 principal plus interest 68,000. So what is going to be the balance outstanding? 1 lakh. Out of 1,50,000 we paid 150,000. Balance 1 lakh outstanding. Interest will be calculated on this 12%. 12,000 totally how much you have to pay? 62,000. Third year, what is the principal outstanding? For this 50,000, interest will be calculated how much? So totally how much you have to pay? 56,000. So simple. This interest will be recognized in P&L account. What is interest? Take it up, don't wait. Total of the interest. This will be recognized in which account? P&L account. This is called as hire purchase price. 2,36,000. This is interest component. This is hire purchase price. But what is the cost of the asset? Two lakhs. Cash price becomes what? Cost of the asset. If you look at interest will be in the reverse order, 3:2:1, because when principal is paid in equal values, interest will be in the reverse order of years, 3:2:1 like that. Some problem, I will give it to you because this can be asked as a gap filler in the exam. They ask 8 marks question plus 3 marks question plus 4 marks question. In the gap, they may fill 1 or 2 marks. These questions can be asked as a gap filler. Take up this. Cash price rupees 3 lakhs. Down payment, please take up this, is not there in the material. Rupees 50,000. Balance to be paid in 4 installments. Calculate interest expense to be recognized each year. Try to work out. What is missing in the problem? What is missing in the problem? Rate of interest is missing in the problem. Any answer? Don't try to calculate rate of interest by applying present value, future value, financial management concept and all. Think normally you will get it. This 75,000 includes what? Interest also. It's like 50,000 you paid down plus 75,000 into how many installments you are paying? 4 installments you are paying. Now you can find out hire purchase price. Down payment plus installments. So what is the down payment? 50,000 plus 75,000. This is paid in what? 4 installments. So it will give you what? 3,50,000. Okay. 3,50,000 is higher purchase price. Good. What is the cash price? Cash price is 3 lakhs. What is the total interest? Difference between cash price and higher purchase price, we can call it as what? Interest. Now how to split this interest? This interest has to be split for how many years? 4 years. First year, second year, third year, fourth year. Okay. There are two methods of working. Not 50,000 divided by 4. It will be 12,500 each year. You see, check the last problem. Is it interest equal? Whether interest is equal. As you start repaying the principal, every year interest will what? Come down. So don't do 50,000 divided by 4. Okay, by crude method you can do 4:3:2:1 ratio. Interest will be in which order? Reverse order. Interest will be in reverse order of the years. 4:3:2:1 ratio. So interest will be like 20,000, 15,000, 10,000 and what? 5,000 for which year? First year, second year, third year and what? Or if you want to understand logically, very simple. What is the higher purchase price? What is the higher purchase price? 3,50,000. 3,50,000 higher purchase price. Now first year, what is outstanding? Out of 3,50,000, we paid immediately. What is the down payment made? 50,000 made. So what is the higher purchase price outstanding for the first year? 3 lakhs. Second year, in the first year we would have paid out of this 3 lakhs. How much we would have paid? What is the higher purchase price? That is installment paid. 75,000 we pay. So what is the balance? 2,25,000. Third year beginning. In this 2,25,000 we would have paid what? 75 means how much? 1,50,000. Fourth year, balance how much will be there? Each year you are paying 75, 75, 75 like that. If you make out a ratio, it will be in which ratio? 4:3:2:1. That is what? 4:3:2:1. This is like higher purchase price outstanding. That is not required. Just for your understanding I have done, that is not required. Higher purchase price is 3,50,000. Okay. In that 50,000, we cannot work out cash price method because we are not given what? Rate of interest. So 3,50,000 minus 50. First year 3 lakhs outstanding. In that each year we pay 75,000. If you look at the ratio of money outstanding, it is what? 4:3:2:1. In this problem, what was missing? In this problem, what was missing? Interest is missing. In this problem, interest is missing. Next. Take up this next question. That's it. This is a very famous question in CA Enter exam. Maybe you would have done this in the regular class also. Down payment 20% of cash price, installments including interest is what? First year 88,000, second year 80,000, third year how much? 72,000, and fourth year how much? 64,000. Calculate what is, everything is missing. What is missing? Cash price, higher purchase price, and what? Rate of interest, everything is missing. See, we can work out down payment, work out down payment only when cash price is known. This is actually installments including what? Interest. What to do? Now we have seen two problems where you can find what is the ratio of interest. If it is 3 years, what is the ratio of interest? 3:2:1. Here it is, if it is 4 years, 4:3:2:1. So what we can do is, pay attention. Okay, let us take cash price paid. I assume that uniform cash price paid is paid. So first year, what is the total payment made? First year total payment including installments, how much is made? 88,000. This includes cash price plus what? Interest. So we can make cash price, let us assume uniform. Interest will be like 4 times 4y. So we can take x plus what? Then second year, how much you are paying? X plus what? 3y. Then third, how much you pay? 80,000. Okay. Like this you can make out for which year? Third year. X plus 2y. How much? Second year, okay. Fourth year, that is the last year of payment. X plus y is equal to how much? 60. See, you take any 2 years and solve, you will get the value. You take third year and fourth year, or first year and second year, you get the value of x or y you will get. What is the value of y you get? Simple. Cancel this, x minus x is 0, 2y minus y, y is equal to how much? Take any 2 years and work out how much? 8,000. Y is equal to 8,000. You can substitute in any one, you can get the value of x. 56,000. Now we can check. X is how much? 56,000. Each year we are paying 56,000. Four into 8,000. Yeah, 56 plus 32, 88. 3y, 24,000. Like that you can work out. You can cross check also. (56 plus 32) you will get 88. 56 plus 24, 80. 56 plus 16, 72, and 56 plus 8, 64,000, like that. So we got which one? Cash price plus interest. Now listen, what is the cash price paid, which is included in installment? This 56,000 plus 56,000 plus 56,000 every year you are paying. Okay, wait. Apart from that, we may have to make down payment also. This will give us what? Total cash price. Simple. If total cash price is 100, if total cash price is 100, what is the down payment? 20. So what is the cash price paid? Clear? If total cash price is 100, in that we make 20% down payment. Balance 80 is what? Cash price paid. If cash price paid included in installment 80% is 2,24,000, what is 20? Cross multiply. If 80 is 2,24,000, what is 20? So what is the total cash price? 2,80,000. Total cash price is 2,80,000. All these balances we worked out. So cash price paid is 2,24,000. Down payment 20%. Total cash price is how much? 2,80,000. What is the total of interest? 32 plus 24 plus 16 plus 8. How much? So total interest is 80,000. Cash purchase price is nothing but what? Cash price plus total interest. What is the cash price? 2,80,000 plus 80,000. How much? Or you can add up the other way also. What is the other way you can add up? Down payment plus total of installments. Down payment plus total of installments also will give us which price? Higher purchase price. The question is not over. They ask you to work out which price? Cash price, yes, we worked out. Of course, total interest is for our reference only. Cash price plus total interest will give us which one? Higher purchase price, or you can do down payment plus installments. That way also. Down payment how much? 56,000 plus all the installments. 88,000 plus 80,000 plus 72,000 plus 64,000. You will get the same answer. What is the next one you have to work out? Rate of interest. Any answer for rate of interest? Any doubt in this? X plus 4y, 88,000. X plus 3y, 80,000. X plus 2y, 72,000. X plus y, 60,000. Take any 2 years and solve. You will get the value of y and x. Okay. What is y? Interest component. Okay. If it is 1y, 8,000. 2y means 16,000. 3y means what? 24,000. 4y, 32,000. Okay. You can substitute in any one, get the x value. Total of all these things gives us 2,24,000. That is only 80%. That is only what? 80%. Why? Because 20% is which one? Down payment. So if 80% is this much, what is the 20% down payment we got for? Total cash price we get. Rate of interest simple to work out. What is the cash price of the asset? 2,80,000. In the down payment, how much you made? So what is outstanding first year? 2,24,000 is outstanding. For which year? First year. What is the interest of the first year? 32,000. Work out the rate of interest. 32,000 divided by 2,24,000 into 100. How much you get? 14.28%. You can verify this with second year also. In this first installment, how much we paid? Cash price. How much we paid? 56,000 paid. So what is the balance outstanding? 2,24,000 minus 56. How much is outstanding for second year? Out of 2,24,000, we paid 56,000. How much is outstanding for the second year? 1,68,000. Outstanding for which year? Second year. What is the interest of the second year? Interest of the second year is how much? 24,000. You can work out 24,000 divided by 1,68,000 into 100. You can verify. Are you getting the same? 14.28%. So kind of a reverse working we do to find out which rate, interest rate. This question can be tested where we are given only installments paid. Using the installments paid and logic, we have to find out what is the cash price and other things. Question number 2 next. X Limited purchased a machine from Y Limited, cash price 2,50,000, down payment 1 lakh, installment of how much? 50,000 each for how many years? 4 years. X Limited depreciates a machine at 10% SLM. They ask you to prepare what? Accounts in the books of both the companies. Accounts in the books of both the companies. Of course, we will do. Okay, what is the cash price of the asset? Cash price 2,50,000. Okay, what is the down payment made? 1 lakh. Okay, how many installments? 4 installments of how much? Which means we are paying 2 lakhs. Look at the total payment made. Look at the total payment made. Down payment plus installment. What is the total payment made? 3 lakhs we are paying, which means this installments include what? Interest. Otherwise, why should he pay more? So what is the total interest? 50,000. We know what to do now. How to apportion this? First year, second year, third year, fourth year. How to apportion this? Reverse order. How much you will apportion? 20,000, 15,000, 10,000 and what? 5,000. Take up this. We'll prepare ledger accounts for this. First, please take up this. Cash price is 2,50,000. Okay. Down payment is 1 lakh plus 4 installments. If you add, it comes to more than the cash price, which means this amount paid includes what? Interest. So total interest will be split in which ratio? 4:3:2:1 ratio. First year, second year, third year, fourth year, interest will be in the reverse order. Done. So ledger preparations, anyhow, I'm going to share this Excel sheet with you. Okay, let us do it will be a monotonous process. Ledger preparation is only a monotonous process that you can understand logically also. I do not want to go by journal method because in the exam they are not going to test which one. Journal, they are going to test only what? Ledgers. And that too with reposition only they will ask. When the installment is not paid, the goods will be what? Taken over like that. Since it's a basic problem, you don't do ledger, I will do the ledger. Okay. Anyhow, this workings are going to come to you. In the books of, who's the purchaser? Hire purchaser. Who's the hire purchaser? X Limited. Two accounts will be maintained. What are the two accounts you will maintain? What is the name of the asset? Machinery account and which account? Hire vendor account. Who is hire vendor account? Y Limited, that is hire vendor account. You will maintain hire vendor account. Of course, debit what comes in? Machinery account data to Y Limited account. Machinery account data to which account? Y Limited account. What is the machinery value? Cash price is the cost of the asset. Every year what will come? Don't take time or don't waste time in copying. Wait. By depreciation, how much percentage? Depreciation, how much is given? 10% SLM. 10% by balance carry down. What is the balance carry down? 2,25,000. Of course, next year to balance brought down 2,25,000. Then by depreciation, by balance carry down like that, you will continue for how many years? 4 years. So this will be 2 lakhs. And next year by depreciation, how much? Like this you can continue for, balancing for is how much? 1,75,000 like that you are going to continue for how many years? 4 years. 25,000 SLM. SLM. Next year to balance brought down by depreciation like that you will continue. No, wait. In the hire vendor account, how to show this? By machinery. By machinery, what is the value? 2,50,000. By interest for the first year. What is interest for the first year? What is interest for the first year? 20,000. Then we are making the payment to cash or bank. To bank, down payment. What is the down payment made? 1 lakh. Down payment is 1 lakh. Again, we make payment at the end of the year to bank. First installment. What is the first installment? 50,000. Don't add interest. That 50,000 included what? Interest. So 1,50,000. Balance will be to balance carry down. What is the balance carry down? Tell me first. 2,70,000 minus 1,50,000 balance carry down is 1,20,000. Next year you will record this by balance brought down 1,20,000. Next year by interest how much? By interest how much? 50,000.
15.
Okay. To bank how much we pay? 50,000 we pay. To balance carry down. Like this it will continue. 85,000. Next year by balance brought down how much? 85,000. By interest how much? 10,000 interest. How much we pay? To bank we pay 50,000. To balance carry down 45,000. Last year, 3 years over. Last year by balance brought down how much? 45,000. Last year by interest. What is interest payable? 5,000. We pay and settle. To bank how much? 50,000. The relationship will be closed at the end of which year? 4th year. Where the liability will become 0 but asset will continue. Asset will be like to balance brought down 1,75,000. By depreciation how much? 25,000. The asset will continue with you. How much? 1,50,000. So nobody will test this at CA level. Okay, this basic problem. Just to understand how to prepare a ledger. Okay, asset account data to hire vendor. Asset account data to hire vendor. In the asset account every year what comes? depreciation, then closing balance. In the hire vendor account, what and all we record? Every year, interest payable, interest accounted to hire vendor account, then make the payment. What is entry for making the payment? Hire vendor accounted to bank, first down payment, first installment, then balance carry down. Second year onwards, interest payment like that it comes. Wait, in the books of the other party when you prepare, this will have a mirror image. What do you mean mirror image? Instead of buy machine, it will become to hire sales. Sales. Instead of buy interest, it will become what? To interest. Like that. Instead of to bank, they collect the money. It will be what? Buy bank like that. It will just show what? A mirror image. So that is simple to work out. See, in the exam, they are going to test only which one? The three position. Ledger. Some installments would not have been paid. The asset will be what? Taken over. That type of question only is prepared. Then what did you do is simple to make you understand what are the ledgers prepared. Right? Asset account and which account? Hire vendor account we prepare. This one anyhow it's going to come in the form of Excel sheet working. Don't copy this and waste time. Okay, question number 3 next. Question number 3. Read it. A Limited purchased a machine from which company? B Limited. Down payment is how much? 10,000. Installments including interest. 25,000, 13,000, 12,000 and what? 11,000 for 4 years. Interest rate is how much? 10%. Rate of interest is given in the problem. Show necessary accounts in the books. Pay attention. If cash price outstanding is 100, interest component will charge will be 10. So total will include what? 110. Here, if cash price outstanding is 100, we charge what? An interest of 10. What is the total? 110. Now, in this problem, we cannot work forward. You have to work what? Reverse. Okay. So let us go with year. Installment paid. Then eliminate interest. We'll get cash price paid. Pay attention. Fourth year, what is installment paid? 11,000. This includes interest. So while working out interest, 11,000 into 10 by 110. 11,000 into 10 by 110 will be what? 1,000. So 11,000 minus 1,000. What is the cash price paid? 10,000. Then coming to third year, what is installment paid? 12,000. Listen, at this time, we are in which year? Third year. This 10,000 also would have been outstanding. This 10,000 also would have been outstanding. So that 10,000 plus how much we pay? 12,000. 10,000 plus 12,000 into 10 by 110. Please remember, we are doing reverse working. We are coming reverse. So 22,000 into 10 by 110, how much it will be? 2,000. So cash price paid is 10,000. Clear? This 10,000 was also outstanding. That's why 10,000 plus now 12,000 into 10 by 110. If you want to cross check, at the beginning of the third year, how much would have been outstanding? At the beginning of the third year, this was paid in fourth year. This was paid in third year. At the beginning of third year, how much would have been outstanding? 20,000 would have been outstanding. And the 10,000 we paid in which year? Fourth year. This 10,000 we paid in third year end. So at the beginning of the third year, both the amounts would have been outstanding. 20,000 into 10%, how much? 2,000. 20,000 into 10%, 2,000. So when you go to second year, how much is paid? 13,000 is paid. At the time, all the amounts would have been outstanding. That 10,000 plus next to 10,000 plus now how much? 13,000 add up. This into 10 by 110. Reverse working. How much? 3,000. So 13,000 minus 3,000, how much? 10,000 is paid. So when you go to first year, how much is paid? 25,000 is paid. At the time, all the monies would have been outstanding. All the 10,000s would have been outstanding. Plus 25,000 also. This into 10 by 110. How much you get? 5,000 you will get 20,000 is paid. Then add down payment. What is the down payment made? What is the down payment made in the problem? 10,000 of down payment is done. Add 10,000 of down payment. If you do this, you will get which price? Cash price. I'll cross verify also, please wait. I'll cross verify also, please hold. So what is the total cash price? Pay attention everybody. 60,000. And the 60,000, how much you settled in the first year? Down payment. Wait, out of the 60,000, we paid 10,000 of which one? Down payment. What is the balance outstanding? 50,000 at a 10%? 5,000. In that 50, how much is settled? This 20 is settled. The balance outstanding will be 30,000 at a 10%, 3,000. Other 10 settled. So 20,000 at a 10%, 2,000. Last year, 10,000 would have been outstanding into 10%, 1,000 like that. Okay, so we just go to the reverse order when they give you what? Rate of interest. So from total installment, eliminate what? Interest. Then you will get which one? Cash price paid. Ledgers are simple to work out only, but I request you to take up this. Of course, I will share the workings in the group also. Then let us have a lunch break and continue, because next one is the crucial important thing, like default and what? Reposition. Like 5 trucks are sold, I leave 2 trucks with you and take over 3 trucks. But I will not accept your value, I will value according to my own terms. How to do that? How to prepare ledger accounts? After the lunch break, we will meet. Okay, 30 minutes maximum, 1:30 sharp we meet. Okay, have a quick lunch and come back. Online students, either you can stay in the meeting or you can exit and join also. Okay, for this problem, also I'll prepare ledger, but you don't copy, I'll share the Excel workings. Yes, who's a purchaser in this problem? Who's a purchaser in this problem? What is the asset name? Machinery account. Who is a vendor? A Limited purchased from B Limited. I hope it is A Limited purchased from what? B Limited. So lunch ka from marandringla. What is the name of the asset? Machine. Okay. What is the cash price of the machine? What is the cash price of the machine? 60,000. You will provide depreciation every year. So it will be like 54,000 for the first year. Let's assume 10% depreciation. 54,000 for the second year. 6,000, then 48,000 like that. This will continue. Just for your reference I am doing, don't copy it. 48,000, what is the depreciation? Like that, this ledger account is going to be prepared. $36,000, like that ledgers are going to be prepared. This by machine, how much you will put? What is the value of the asset? 60,000. What is the interest for the first year? We worked out. Look at the table. 5,000. What is the down payment made? What is the first installment paid? Balance carried down. I hope it is 30,000. By balance brought down will be 30,000. Second year interest. What is the interest for the second year? 3,000. Amount paid is 13,000. Balance 20,000 will continue. Next year 20,000 opening balance. Interest is how much? 2,000. Okay. So 12,000 we paid. How much balance? 10,000. Last year by balance brought down 10,000. What is the interest? 1,000. To bank, how much we pay? 11,000 and closed. Ledger accounts are ditto or same, like asset account is maintained and which account is maintained? Hire vendor account is maintained. Next. Are they getting? Reposition. This is the most important area. A reposition of goods. In the examination, they will not ask for complete reposition. They will ask only what? A partial reposition. Okay, we will go for the partial reposition, but let us understand what happens. Okay. Now, till the date of reposition, we are not doing tax, we are doing which one? Accounting. Till the date of reposition, we can claim what? Interest and which one? Depreciation on accrual basis. On which one? Accrual basis. Start. Depreciation, please take it along with me, and interest is claimed or charged till the date of reposition. On accrual basis. Till the date of reposition on what basis? Accrual basis. Number two. Now whether the vendor and buyer will agree on the same value. Whether vendor and buyer will agree on the same value. Start. Next. Assets repossessed is revalued, or you can say valued, as per hire purchaser and hire vendor terms. For example, hire purchaser may depreciate 20% WDV, hire vendor may go for what? 30% SLM also. As per the agreement, they will go for what? Valuing the assets. Okay, in the books of hire purchaser, in the books of hire vendor. Pay attention. In the books of hire purchaser, let us assume we sold about 10 machines. Okay, we purchased about what? 10 machines. In the 10 machines, we were not able to pay one installment. Will they take over all the 10 machines? Okay, let us assume they are taking over 4 machines. They are taking over what? 4 machines. As per hire purchaser value, as per hire purchaser value, it comes to 25 lakhs. This is nothing but cost minus depreciation. This is as per which value? Purchaser's value. As per hire vendor value, whether they will accept for higher value or lower value. Whether vendor will take over the asset at a higher value or lower value. Lower value only. My value is 25 lakhs. Other value may not be accepted. Let us assume he valued the assets by applying his own depreciation. It comes to 22 lakhs. Okay. What is the last year? What is the loss to the hire purchaser? 3 lakhs. This will be recognized in P&L account. This will be recognized in which account? P&L account. The journal entry will be like debit the receiver, hire vendor account. Hire vendor account data. In this example, what is the value at which they take over? 22 lakhs. To what they take over? Let's assume it is machinery account. What is the machinery we are losing? What is our value? What is our value? 25 lakhs is our book value. What is the loss? That loss will be transferred to which account? Profit and loss account. So take up this journal entry. In the books of hire purchaser, this is the entry for assets taken over. This is in the books of hire purchaser. Ignore all these things, we will see in a problem. Start. In the books of hire purchaser. In the books of hire purchaser, what is the journal entry we will pass? Hire vendor account debtor, P&L account debtor to which account? Asset account. Okay. So claim the depreciation and interest till the date of repossession. Then asset repossessed will be valued as per what? Hire purchaser and hire vendor terms. Okay, what is journal entry will pass? Hire vendor account data, the value at which the asset is taken over, P&L account data to which account? Asset account, like that. Okay, this is in the books of which one? Hire purchaser. In the books of hire vendor. Form it is called as seized goods, or what is called as what? Repossessed goods. Repossessed goods account data to which account? Hire vendor account. Debit what comes in, credit the giver rule. So what hire vendor will do with this repossessed goods? What hire vendor will do with the repossessed goods? He will recondition them and sell them. Same like seized vehicles, they'll just do some tinkering or painting, etc. Some do repair work and what? They will sell them for a profit. Next. Repossessed goods. Goods shall be sold by vendor after repairs, if any. So let us do a problem to understand this concept better. If question is asked for about 5 marks, 6 marks from this chapter, that will be like question number which one? 4 and 5. 4 and 5 model only will be tested for about 4 to 5 marks in the exam. Shall we? Have we taken up this? Over? Go to question number 4. This we are going to do it along. We are going to prepare ledger accounts in the books of what? Both the parties also. Okay, it is not like you wait and watch. Okay, let us do it along. Okay, go to that. X Limited acquired how many trucks? 5 trucks having a cash price of 1 lakh on hire purchase basis. Down payment is 20%. Remaining is what? 4 equal installments together with an interest of 15% annum. X Limited could not pay. Okay, third installment. 2 trucks were repossessed by Y Limited, depreciating them at what? 20% per annum. SLM. Okay. Those were reconditioned at a cost of 6,000 each and sold for what? 75,000 each. That is hire vendor. Okay. X Limited is a hire purchaser, charging depreciation at the rate of what? 20% WDV. Vendor is charging 20% SLM while taking over the asset. But purchaser is charging what? 20% WDV. So before we work out all this repossession or whatever, what is the first one you have to do? You have to calculate what? What is the cash price and what? Hire purchase price, interest, all those things. Start. Computation of interest and hire purchase price. Do it along with me, don't wait. What is the cash price outstanding? What is the cash price of the asset? 5 trucks into 1 lakh. 5 lakhs. What is the down payment? 20% means 1 lakh. Balance 4 lakhs. This we are going to pay So principal, let us assume that it is equal amount, 1 lakh, 1 lakh, 1 lakh, like that we are going to pay. With how much percentage interest? So first down payment will not contain installment, it is interest. This 1 lakh will be with what? This into how much percentage interest? 15% interest. So first installment should be 1 lakh plus 60,000, 1 lakh 60,000 you have to pay. Outstanding amount will be 4 lakhs minus 1 lakh, how much? 3 lakhs. Second installment will be 4 equal, no. This cash price is paid in 4 equal installments. Cash price is paid in 4 equal installments. So what is the third installment? Don't go to fourth installment because third installment itself is not paid. This 1,30,000 itself is what? Not paid. So don't work out the fourth one. That lead to unnecessary confusion. We can stop because X Limited could not pay which installment? Third installment itself. So the down payment is made, first installment is paid, second installment is paid, but the third installment could not be paid. How to value, how to calculate profit or loss, we'll do it later. But anyhow, we have to prepare ledger accounts for how many months? How many years? 3 years. Till the repossession, you will be asked to prepare ledger accounts. Take up this first, then we will proceed. Shall we start? Ledger accounts. First, let us do in the books of which person? Hire purchaser, and then let us go in the books of hire vendor. Start. In the books of hire purchaser. Who's the hire purchaser? Start. In the books of hire purchaser. What is the name of the asset? Truck account. Who is the vendor? Have we taken up this interest calculation? Okay, I'll wait. I'll wait for 1 or 2 minutes. Start the ledger accounts. So how many years the ledgers will come? 3 years only. Fourth year the asset is going to be taken back. Only for 3 years you will be expected to prepare. Start. First 3 years there is no change, same thing. You can do it. Don't close the third year balance because some reposition is there. Truck account data to Y Limited account. What is the cash price of all the 5 trucks? 5 lakhs. By depreciation, how much percentage? 20% WDV. So let us work out as per WDV. %, WDV. Don't close the books of accounts for the third year because assets are repossessed. Truck account how much? 5 lakhs. What is the interest for the first year? What is the interest for the first year? Check the table. 60,000. First down payment is made 1 lakh plus installment is also paid. To balance carried on how much? 3 lakhs. This is in the books of hire purchaser. What is the second year interest? 45,000. Second installment is also paid. To balance carried on how much? 2 lakhs. What is the interest for the second year, third year? 30,000. But we are not paying the money. Wait. How many assets are purchased? 5. We have to value the trucks. Of value of 5 trucks as per hire purchaser. Who is the hire purchaser? X Limited. 3,20,000 minus current year depreciation 64,000. What is the value you are getting? 3,20,000 minus 64? 2,56,000. Now, how many trucks are repossessed? Simple. 2,56,000 into 2 by 5. Clear? Value of 2 trucks. 5 trucks, if it is 2,56,000, what is the value of 2 trucks repossessed? Tell me. 2,56,000 into 2 by 5. 1 lakh? 2,400. 1 lakh 2,400. Pay attention. Now we have to value as per what? Hire vendor. That is Y Limited. They are following which method? 20% SLM. 20% SLM. Pay attention for 2-3 minutes and you can take it up. Cost of 2 trucks. What is the cost of 2 trucks? 2 into 1 lakh. How much? 2 lakhs then. Less depreciation, straight line method. So 2 lakhs into how much percentage? 20% for how many years? 3 years. How much? Ah, 80,000. So listen, my value is to 1,02,400. Your value is how much? 80,000 means is there a loss or gain? Loss due to repossession. 22,400. This will be transferred to which account? P&L account. When you pass a journal entry, it will be like debit the receiver. Y limited account debtor. Y limited account debtor how much? Y limited account debtor how much? He takes over for 80,000. To asset account, to truck account, I lose a truck worth 1,02,400. The loss will be debited to which account? P&L account. Debtor how much? 22,400. When you post this, it will come as by Y limited. By Y limited, they take over for how much? 80,000. By P&L account, 22,400. It will come. Here it will be to truck account. To truck account, they repossess for how much? 80,000. The balance will continue. This we have to pay it in the future. 2 lakhs plus 30,000 minus what? 80,000. This balance will continue. This we have to pay with interest in the next year. The truck balance also will continue. 3,20,000 minus all these things. You can verify also how many trucks are taken over. How many trucks are taken over? 2 trucks are taken over. 2,56,000 into 2 by 5 powder, the value of truck taken over came. How many trucks are left with us? So 2,56,000 into 3 by 5 you apply. 2,56,000 into 3 by 5. This will be the value of how many trucks? 3 trucks. Take up this. Value of the 5 trucks as per the other party he worked out. As per hire vendor terms, the value is worked out. So pass a journal entry for this. So loss due to repossession is 22,400. This is in the books of which party? Hire purchaser. Debit the receiver, debit the loss to P&L account. To which account? Truck account. By Y limited, by which account? P&L account for the loss. You can cross verify this. This 1,53,600 is nothing but 2,56,000 into how many trucks left with us? 3 by 5. So next installment will not be 1 lakh plus interest. Next installment is going to be 1,50,000 plus what? Interest you have to pay. So once again, let us check the notes. We can claim depreciation and interest on accrual basis till the date of what? Repossession. Second, the asset will be valued as per hire purchaser and what? Hire vendor terms. The loss due to repossession will be transferred to which account? P&L account. Y limited takes over for 80,000. Loss 22,400 is transferred to P&L account. So Y limited account to truck account 80,000. The balance carried on is how much? 1,50,000. That will be settled in next year. Or do it in the books of which party? Higher vendor. In the books of which party? Y Limited. He will meet in which account? X Limited account, that is hire purchaser account. As I told you, this will be a mirror image. Instead of buy truck, it will come as what? To hire sales. What is hire sales value? 5 lakhs. To interest. Interest for the first year is how much? 60,000. It will be by bank for the down payment. What is the down payment? Then by bank for the first installment. By balance carry down. What is the closing balance? 3 lakhs. What is the balance brought down next year? 3 lakhs to interest. What is the interest? 45,000. We collect the second installment also. 1,45,000 is collected. By balance carry down. How much? 2 lakhs. Next year, to balance brought down 2 lakhs. You can claim the interest on accrual basis also. How much? 30,000. But that other party is not paying money. The other party is not paying money. It will be transferred to repossessed goods account. The balance will be transferred to what? Repossessed goods account. How much is the value of repossessed goods account? We don't repossess for 2,30,000. We revalued, right? Cost of 2 trucks revalued 80,000. By balance carry down, this will be collected in the next year. How much? 1,50,000 will be collected. Wait, when you prepare repossessed goods account, to which account? To X Limited. We repossessed goods for how much? 80,000 and we spent money to cash our bank. How much of expenses incurred? Check the problem. How much of money is spent for reconditioning the goods? 6,000 each means how much we spent? 12,000. It is sold for by cash or bank. 75,000 each means how much? 1,50,000. The balancing for will be transferred to P&L account. We sold for 1,50,000. 80,000 is the value at which it is taken over and spent 12,000 means the balancing for will be transferred to which account? P&L account. Simple. Take over the goods, spend money and sell. The profit or loss is transferred to which account? Profit and loss account. This is in the books of which company? Hire vendor. This model only will be tested in exam, like partial repossession only will be tested in exam. Try to go through the next question. Question number 5, we will work out. Go through question number 5. ABC Limited purchased 3 machines having a cash price of 2 lakhs each, payable 1 lakh down plus 4 installments of what? 1,50,000 each. 10% depreciation, could not pay third installment, therefore 2 machines are repossessed by hire vendor, depreciating at what? 20% SLM. Vendor repaired them at 20,000 each and sold for what? 1,20,000 each. What is missing in the problem? Interest. So what is the, cash price? 6 lakhs. Higher purchase price, down payment plus installments. What is the total you get? 7 lakhs. So what is the total interest you get? We can apportion that ratio. 4 years, 40,000, 30,000, 20,000 and what? 10,000. Like that you can apportion the total interest. Then prepare ledger accounts in the books of which party first? Who is the purchaser? Start. In the books of KB Limited. Who is the purchase? Who is the vendor? Who is the vendor? We are not given. So hire vendor account, hire vendor limited. What is the value of the trucks? Two lakhs into 3, how much? 6 lakhs. What is the depreciation method we follow? 10% SLM. What is the asset? Machinery or truck? Hire vendor account by machinery account. How much? 6 lakhs. Interest for the first year is 40,000. Down payment 1 lakh plus what is the first installment? Balancing for is how much? 3 lakh. Next year 3,90,000. What is the interest for the second year? 30,000. We paid 1,50,000. Balance 2 lakh. Last year 2,70,000. Third year. Okay. Interest is how much? 20,000. But we are not paying. The assets are repossessed. Thank you. Thank you for correcting. Okay, what is the value of 3 trucks with AB Limited? 4,80,000 minus 60,000. What is the value of 3 trucks? Four lakh. So how many trucks repossessed? Oh, 3 machines, sir. 4,20,000 into how many machines are repossessed? 2 or 1? 2 by 3 repossessed. 2 out of 3 repossessed means what is the value? How much? 2,80,000. So value as per the hire vendor. He takes how much depreciation? 20% SLM. Cost of the trucks are 2 into 2 lakhs. How much? 4 lakhs. Depreciation 4 lakhs into 20% for 3 years. 4 lakhs into 20% for 3 years, how much you get? So 1,60,000 is the value. So 2,80,000 taken over at 1,60,000 means what is the loss? Check out this. By a vendor, he takes over for 1,60,000. Loss is how much? 1,20,000. Balancing for will be the asset value. This is in the books of which party? Hire purchaser. Do it in the books of hire vendor also. Try. In the books of the other party, who's the other party? And the books of which one? Hire vendor. What are the accounts we will prepare? What is the hire sales value? Interest for the first year? How much? Down payment? 1 lakh? Down payment. First year installment? Closing balance? Interest of the second year? Second installment 1,50,000. Closing balance 2 lakhs. $20,000 repossessed goods. Balance carried on is 1 lakh to AB Limited. It is reconditioned at a cost of, so 40,000 spent for reconditioning, sold for 40,000. So balancing for will be transferred to which account? P&L account. So this is in the books of which one? Hire vendor. Yeah, fine. Now in the revision class, I will call you. No, I am taking the accounts. Done. over. Next, we shall proceed to which account? Investment account. Investment account.